I now hand the conference over to Mr. Ashish Desai of Emkay Global. Thank you, and over to you, Mr. Desai.
Yeah, thanks, Neera. Good afternoon, everyone. It's a pleasure to host the management of Radico Khaitan for their Q1FY22 earnings call. From the management, we have with us today Mr. Abhishek Khaitan, Managing Director, Mr. Dilip Bantiya, CFO, Mr. Amar Sinha, COO, and Mr. Sanjeev Banga, President International Business. I'll now hand over the call to the management for the opening remarks. Over to you, sir.
Good afternoon, ladies and gentlemen. Thank you for joining us on our first quarter FY22 results conference call. I hope you are all doing well and keeping safe. Strong demand momentum which was seen during the Q4 of last year continued in April 21, only to be disrupted by a more severe second wave of the pandemic. May 21 was severely impacted as the pandemic hit all parts of the country. After peaking in May, COVID cases started receding in June 21 and situations started to normalize to a large extent by the second half of the month. In July, as restrictions are lifted and normalcy resumes, month-on-month volumes indicate a positive trend, and we are confident of an improved industry performance led by prestige and above segments in the coming quarters. Teams across different divisions came together with resilience and strength to ensure seamless operations and continued dispatches. This has enabled us to outperform the industry yet another quarter. Our top priority during this period has been the health, safety and well-being of our employees and partners. We have also arranged for the vaccination of all our staff at the Rampur plant. With the vaccination drive now well underway, we believe the worst is behind us and we are seeing an improving trend month on month led by prestige and above segments. In Q1 FY22, we registered 59% year-on-year growth in our IMFL volumes. After a strong performance, last year I'm proud to report that Radico Khaitan became the largest IMFL exporter out of India during the quarter. Our brands continue to win applause internationally. In the Millionaires Club Magazine 2021 edition, 8 PM Whiskey was ranked the 9th largest whiskey globally. Magic Moments Vodka was ranked the 11th largest vodka. Contessa Rum was ranked the 9th largest rum. And our Old Admiral Brandy was ranked the 2nd largest brandy globally. As discussed on our previous call, we continue to focus on further strengthening our premium brands portfolio with more premium launches in the brown spirit as well as white spirit space. With situation normalizing now, we are looking forward to introducing new brands in the coming quarters. We are progressing well on our strategic growth agenda and are well prepared to tackle any near-term uncertainty in the industry. Radico Khaitan is confident of delivering industry outperforming growth during FY22. Before I hand over the call to our CFO for a detailed discussion on the operating and financial performance, I want to bring to your notice that as part of the auditor rotation process, we have appointed Walker and Chindiok as our statutory auditors for the next 5 years. Thank you, and over to you, Dilip.
Thank you, Abhishek. Thank you everyone for joining us on this call today. Wish you the best of health during this pandemic. After ending the financial year 21 on a very strong and optimistic note, we reported a robust operational and financial performance during Q1 of FY22. During the first quarter, we reported an IMFL sales volume of 5.61 million cases, representing an increase of 58.8% on YOY basis. Net revenue from operation during Q1 of 22 was 603 crores, representing an increase of 47.3% compared to Q1 of 21. During this period, IMFL sales value increased by 56.3% as a percentage of total revenue. IMFL sales account for 77.7% of the net revenue compared to 73.2% during the same quarter last year. On a sequential basis, gross margin contracted by 87 basis points due to the unfavorable product mix, which was impacted by COVID-induced lockdowns and scattered market timings. Despite the gross margin contraction, EBITDA margin expanded by 54 basis points from 14.7% in Q4 of FY21 to 15.2% in Q1 of FY22. Raw material prices overall have been benign during Q1 of FY22. Toward the end of last year, we saw some inflationary pressure on dry goods such as packing material, but it has remained stable around those levels in Q1 22. ENA prices have also been stable during the quarter. Given the ethanol blending policy of the central government, we may see some headwinds in the ENA prices, but that should not be any significant. Company has taken all efforts to optimize cost and to mitigate any margin headwinds. With our portfolio premiumization, we expect our operating margin to trend upwards. We are aggressively investing behind our brands to gain market share and continue the premiumization journey. During Q1 of FY22, A&SP expenses increased by 70.5% on YOY basis to 33.48 crores. As a percentage of IMFL sales, A&SP expenses were 7.2% of Q1 FY22 compared to 7.3% for full year of FY21. This is in line with our guidance of 7 to 8% of IMFL sales as investment in marketing. In the prestige and above segment, we expect this to be in double digits. Finance costs decreased by 29.5% on YOY basis from 6.57 crores to 4.63 crores. The company's cost of borrowing is lowest in the industry due to the lower interest rate scenario, stable profitability, strong capital structure, and improved liquidity position. We have an efficient working capital management and a very strong credit control system. We have a strong financial position and comfortable liquidity. During these difficult times, we are taking all necessary steps to sustain our financial strength, maintain robust business model, and grow consistently, competitively, and profitably. With this, we will now put the line for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Madhusudan Kela from MK Ventures. Please go ahead.
Hi Abhishek and the team, congratulations on continuous fantastic performance quarter after quarter. So my question today in open forum is a more strategic question. The company is likely to generate significant cash flow since your now debt is virtually zero, and whatever you generate will be virtually a free cash. So what is it there in your mind on a strategic basis from a 5-year perspective? What would you like to do with the money? How much can be absorbed in the business for the capital expenditure? And once the company is left with free cash, can we have some kind of a policy for distribution of cash? Have you given thoughts to all those questions?
So I take this question, Madhuji, with your permission of MD. The fact is that we have come a long way. First of all, I would like to just narrate you a lot of what the Radico has done for last 5 years, and then I'll take you through that what will be the cash generated in future can be used on. So in last 5 years, if we recall, then in 2016, my debt was around 950 crores. and as on 31st March, it was sub 200. So we have generated in last 5 years operating cash flow of around 1,700 crores. Out of that, around 750 crores have been used to repay the debt. We have paid 250 crores of taxes. We have paid interest of 340 crores and dividend of 90 crores. The capex which has been done and the working capital efficient management and all that, which has taken 275 crores. So all put together, the 1,700 crores have been utilized to the best rational way. Our resource allocation is very, very judicious. We look at each and every aspect of any capex and look at the return on capital employed, and those, then only these resources are being deployed. Coming back to your question regarding the cash flow generated from here onward, because now we are virtually a debt-free company, and the debt is sub 200 crores with a working capital of more than 1,000 crores. So from coming forward, we will look at the opportunities which can generate ROC of more than 20-25%. Look at that, and the further cash, whichever available in the balance sheet from the cash generation, will be utilized to, one, how do we create value for the shareholder? Where it can be a bigger dividend payouts, it can be buybacks or anything. But at that point of time, what the board decides, what is the best and tax efficient manner to utilize those cash to be distributed to the shareholder will be taken by the management.
Yeah. So Dilip, as a shareholder, my first of all, congratulations to the entire team. There is absolutely no doubt that the effort has been humongous and the results are there for everyone to see. So congratulations once again. What my point is that, let's say if you generated 1,700 crores in last 5 years, I can visualize that you could generate maybe double that amount over the next 5 years. So what I wanted to put across is that after you do the capex, can we come out with a clear-cut policy that 30%, 40%, 50% of the net cash generated will be given as dividend buyback? And it is like a policy. Whatever you generate, the shareholders get it. And I'm sure, shareholders have waited long enough for to be deserved for this liberal payout. So that's the point which I wanted to just put across.
No, Madhuji, this is Abhishek Khaitan. You're absolutely right. So first, our aim was to reduce the debt, and as what Dilip said, that we look at opportunities where in certain areas where our ROC is more than 20 or 25%, and whatever the surplus cash which will be there, which also we feel can be double the amount of what we have generated in the last 5 years, depending on the board's call, can be used only for two things: a buyback or higher dividend payout.
Sure. So I have your assurance.
Getting out a policy on that in the near future.
Fantastic. I have one more question, Abhishek. Since you said in your opening remark that you have been the largest exporter of liquor from India, what kind of opportunities do you see in the export market over the next 3-5 years, and what is the company doing to actually capture these markets?
See, if you see, Madhuji, I would like Sanjeev to answer this, but I'll just give a little this thing. The biggest thing what the company did when we launched our Rampur single malt, and the demand for this product is more than what we can supply. And about 3 years back, we had invested a lot of money into tripling our malt capacity and the malt maturation, which I think from 2023 should kick in. And also with the Jaisalmer in the travel retail and across the globe. So what we are concentrating on getting our brands with the right distributors and being present in the right places. And as far as Rampur goes, the demand is so much that whatever we produce, it gets sold out.
Madhuji, let me add to what Abhishek just said. As you're aware, our brands are currently in 85 countries, and the opportunity exists across the board, across markets, whether it is for our luxury brands like Rampur and Jaisalmer, or for our other prestige and above brands, whether it is 8PM or Magic Moments and all. So we've seen an upswing across markets, whether it is US, Europe, UK, Far East, everywhere we've seen, and we are fairly confident as the markets open up, the lockdown restrictions keep coming down, we will continue with this momentum in the overseas market. The other thing that I would like to comment on is liquor is a highly taxed product commodity across the world. So we are also exploring possibilities of local bottling in a couple of these markets. As a startup, we started on a small wave of bottling our Morpheus in Malaysian market. The response has been very positive over there as well, and we are exploring possibilities of going into local bottling into a couple of as well, depending upon the taxation structure, the strength of the partner, and the local infrastructure. So we are pretty excited about the opportunities that are available to our brands in the international markets over the next couple of years. And of course, Rampur, Jaisalmer, and the newer expressions of our single malt, as well as Jaisalmer, and a couple of other luxury products that we have in the pipeline should give a big boost to our export business.
Yeah. Just to finish, this point, as you yourself said that you are present in 85 countries, but our absolute number of export coming from these 85 countries is still very small. The point which I was wanting to ask is, do you see a 5-10-fold increase in export revenue over the next 5-7 year time frame? While giving a specific number is very difficult, but do you see that kind of potential does exist and the company is working towards it?
As I said, Madhuji, we are, the quantum jump in the numbers would essentially come once we start doing local bottling operations in a couple of markets because of the tax and duty advantages. So we are very actively considering various options on that, because export from India will always be plagued by the high taxation in the importing market.
Sure.
So the way forward definitely has to be local bottling in a couple of key markets, and that should give us a quantum leap.
Okay, thank you so much. Wishing the entire team all the very best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good afternoon. So my first question is on the new launches you talked about. Obviously, you've developed a very interesting brands on the luxury side. So when can you give us any timelines on when we'd expect these? So one, the luxury brands to percolate down to the Indian market, and secondly, maybe more affordable variants of those, whether it's malt whiskey or gin or vodka, to again be launched in the Indian market. So can you give us any timelines over the next say few quarters?
Well, in terms of luxury brands, it's an ongoing process, especially for our Rampur Indian single malt. Even the latest expression that we launched of Rampur was Rampur Asava, which again has been very well received. It's the first single malt which has been finished in an Indian wine cask. So it's an ongoing process. As we earlier also mentioned, we've enhanced our malt capacity a couple of years ago, and we are experimenting with a lot of newer expressions of our single malt to share with the world what India is all about and the Indian taste and profile. So there are a lot newer expressions that will be coming out in the years to come. The same thing is with our craft gin as well, Jaisalmer. Now, in terms of the domestic launches of that, I'll let Amar address that.
So, first of all, addressing Rampur Single Malt and Jaisalmer, we are happy to state that the brands are now in the process of getting listed with the Defense Services Canteen Stores Department as we speak. And that offers huge opportunity, particularly considering the fact that BIO brands in CSD canteens are facing some reluctance there in terms of ordering. And therefore, there is enough excitement and demand for premium Indian products. So that offers
huge opportunity for Rampur Single Malt and Jaisalmer. Having said that, our premium brands that we have in the domestic market, Magic Moments with a 60% market share, is now considering the launch of a very, very premium variant, which would be somewhere parallel to Absolute. So that's a very premium version that's being launched. In addition to that, we are launching two super premium whiskies over the course of this 12 months, which is about to set in. So these are also going to be the premium most variants in the whiskey segment.
Thanks. Just in terms of these launches, we've seen, for example, 8 p.m. Black now will be more widely available, but even in some of the key states like Karnataka, at this point, it's yet to be launched. So when do we expect, you would launch these, say, two super premium brands over the next 12 months? By when would you expect a sort of nationwide coverage, or at least in your key states?
So we are right now available in 16 states, and we plan to expand the presence and distribution of this brand over the next 6 months in the balance of the states, which will be another 5 to 6. Just to add on what Amar has said, our policy in Radico has always been that whenever we launch a new brand, we do it very selectively. For the first 4-5 months, we concentrate only in a few towns or cities and then take it national. So even if you see a 8 p.m. Black, this is our second year of last year was the second year, and the second year itself we did 1 million case, and the brand has responded very well, and now we are expanding it across, and hopefully it should be close to a 2 million case in the current fiscal. That's right.
I understand. That's very clear. And just one last one from me. In terms of working capital, would that increase as your volumes pick up as the situation normalizes, or do you think this is, in terms of days, we should not see any meaningful change?
So Aditi, to this question, actually what we have learned in this last 5 years, we have kept the working capital very, very controlled, and you've seen that number of days, which used to be at 61 number of days from gross sales basis point of view, has come down to 33 days. And this is the optimum utilization of our resources with these launches and all that. I think there could be some increase, but it is not significant. It will not be very significant. At this point of time, we don't see that there will be a huge working capital deployment on account of these launches. It will be within limits. The number of days will be also within 33, 34 days only.
Thank you. That's all from my end. Thank you very much.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks, and congrats on growing again faster than the industry, even in Q1. On a quarter-on-quarter basis, clearly you have done better. So my question is on home delivery. So in the wave 2 of pandemic, did you again see some signs that the home delivery is picking up? Why I'm asking this is, one, wave 2 should have ideally helped, but we saw the market leader divesting its stake completely in its home delivery e-commerce business, which was very surprising. So what would be your take on, in your market, how is home delivery panning out?
So first of all, let me tell you that home delivery is there to stay in the long term. Right now, these are very initial stages, and as every business has teething problems, home delivery is also facing one, and that too with the most complex of consumer product category that we are in. So if you look at just Maharashtra, their home delivery has always existed. Now they have made it official, and Maharashtra has now been thriving on home delivery because most of the bars and permit rooms that are operating there are actually basically they are working on the home delivery model. So there are different states which are still struggling with it, but in the times ahead, we see that this is a model that will settle in, and it will open up great challenges and opportunities both for this business.
And second, glass prices have been moving up. So if you could tell us how much of inflation you see in glass prices either in Q2 or the balance part of year. And similarly on ENA, what would be your outlook?
So as far as glass prices are concerned, see, first of all, you have to understand that new capacities are coming up by the day. And there are huge unutilized capacities already lying with the leader in the glass market, the glass manufacturer. So in the last 2 years, glass prices have already seen an increase by almost 15%. So we see that it is going to remain stable in the times ahead with the increasing capacities that are being created.
ENA. As far as ENA is concerned, actually, at this point of time, with good monsoon, the agri income increasing, the crop increasing, the all-time high production crop of the crops of the grains, etc. I think these are stable levels. But the point is, in due course of time, as the government blending program is shifting from 8.5% currently to 20%, we might see some headwinds. And those are not a challenging ones, should not be significant ones. And there is the capacity coming in. There is a 360-degree program of the government, how the grains which get wasted can be utilized for all that. So I think, and the company's strategy of premiumizing the portfolio and gaining strength in the premium segment of the portfolio, this has a very marginal impact on my gross margin and operating margin. So we are geared for that.
And sir, last question. So your P&A in Q1 has grown slower than your economy end. So are you concerned? And on sentiments, are you thinking because wave 2 was far more deeper and far higher number of vaccines are picking up, which was not the case in wave 1. What would be your take on sentiment?
So first of all, I tell you that this quarter has been an abnormal quarter. And this cannot be treated as the trend. Trend is the premiumization, and the premium products are selling in growth-wise higher than the regular category. So I will say this cannot be treated as a trend. From July onward, we are seeing again the prestige and above category is going in double digits.
I would like to add. Yeah. See, first of all, the P&A segment has grown slower in this first quarter for the entire industry. But the most pertinent point to be made here is that during the second wave, at the retail outlet, the consumer of a premium brand has been not visiting himself. Therefore, by default, the regular and others have gained market shares and sales. But the most pertinent point that I wanted to state about Radico brands is, while the industry lost 1% market share in P&A from 19 to 18, Radico in fact has increased its market share points in the P&A segment. So the brands of Radico, basically they are in the premium end of the market and they are buoyant. And that is a trend we see in the times ahead.
Okay. That's all from my side. It's very helpful. Thanks a lot.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Hi, Abhishek and team. I have a more question which is kind of a retrospective of what has happened in the past. And to some extent, therefore, I want to know your views about the future. So when we look at the picture, here is Radico Khaitan, with in a country where whiskey is the most important liquor segment, and Radico doesn't have many whiskey products to offer at that point of time. And yet, Radico has done remarkably well over this time frame. So while many answers we know as to how you have gone about that, you have never discounted your products, you have not tried to sell on cheap offerings, you have tried to build quality brands, and that entrepreneurial energy compared to complacent kind of multinationals. But many of them have major brands, global, easy recognition, and yet Radico has done remarkably well for itself. So it is both a compliment and kind of seeking to know what has made this journey so much more possible, and where do you see it over, let's say, next 5 years and more?
Bharatbhai, thank you for your compliments, first of all. See, as a company, Radico Khaitan, we started young in 1998. And that time, even if you look at my balance sheet, we had a loss in the company and a debt was 35. So I had no money to build the brand. And so gradually, being an Indian and a proud Indian company, we knew where the gaps are. And that's how we started with our 8 PM whiskey, which today is now more than 10 million cases. We identified the gaps we would be the only company to be present in all the spheres. That is vodka, whiskey, brandy, rum, and gin. In brandy, then we achieved the market leadership with Morpheus. And what we have done is we've always priced our product higher than the competition, because we believe that in liquor, the higher you pay, the more image you get. So we've always gone against the competition of not discounting the brands. And luckily for us, it has worked. And the latest is with our Rampur and the 8 PM Black. So till now, the journey has been very interesting. But going forward, what I feel that Radico is now absolutely liberated because our balance sheet is very strong. We are virtually a debt-free company. The company is throwing out a lot of cash. And this is the right time to go after segments of really high premium where your margins are high. It might take a little time, but eventually it is going to pay us a lot, like what happened when I launched Magic Moments Vodka. So we feel that now is the time for our new launches in the whiskey space, which we are going to attempt in the current year. In the meantime, our old brands have started now gaining momentum, whether it's a Magic, whether it's a Morpheus, all other brands like Rampur also. It's taken 4 years. But now with the production coming in and Rampur and Jaisalmer getting into the armed forces can be a big thing. So we are quite confident of the future that our premiumization journey has just started.
You didn't choose to comment, but very clearly, though the multinationals which compete have globally recognized decades-old brands which have been known around, and yet here is a young Indian company which is remarkably built a premium whiskey brand, which is quite an achievement in itself. So what do you put it more to? Entrepreneurial zeal of the firm and the team, or the complacency of the multinationals that compete, or both?
To answer your question on this, I think our team is very motivated. Our decision-making process is fast. And being an Indian company, we know the Indian market very well. And we are hands down. And everyone's role is very well defined in Radico. And the enthusiasm is very high. So I think it's a combination. And most importantly, we come from a blending background, because when I started the branded business, it was my father who had created the distillery. So our blending, which is the heart of any whiskey, is the main thing. So I think that is one of our core strengths of production, coupled with the marketing and innovation which our team has brought in. So I think it's a combination of everything.
And would you say that while we have created certain superior growth rate compared to the industry, going forward in terms of the differential, will the lead get bigger, or the gap will get wider?
Bharatbhai, if you see 4-5 years back, my growth rate had slowed down because we had killed a lot of brands where the profitability was not there. So our aim in Radico is to grow our premium portfolio. Growth will depend on how the market behaves, but our aim is to now kind of take into every sphere of the premium side. So more than the volume growth, I'll be more concerned with my premium growth.
And so measured in terms of the rupee sales, will our growth rate differential widen compared to the past as compared to competition?
See, next 2-3 years, I feel we'll outsmart the industry, Bharat.
Okay. Thank you, Abhishek, and all the very best.
Thank you, Bharat.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Aaron Armstrong from Ashmore Group. Please go ahead.
Hi, thanks very much for taking the question. If we could go into some more detail, please, on the prestige and above share. So looking at the Q1 numbers, the sales value contribution of prestige and above was 46.8%, and then that's down from the Q4 level of 51.8%. Could you talk about some of the factors behind that? I think you mentioned briefly in terms of the impact of lockdowns. If you could go into some detail there, please. And then on a forward-looking basis, in terms of recovering to that 51% level or even higher than that, do you think that takes 1 or 2 quarters, or do you think it could be a little bit more quickly than that? So yeah, how do you think the contribution will trend in the short to medium term, please?
So the slowing down of the P&A sales is a very temporary phenomena. It's happened primarily because of restriction of time and the number of outlets that have operated in the market. It is very natural that when you look at the premium consumer, he doesn't visit the outlets if it is because of the pandemic or because of it's too crowded by the people at the lower segment. So that is the reason why the P&A has slowed down compared to the past. However, having said this, now we have already started seeing growth as the markets are opening up and the shops are coming back to business. The growth in the premium segments has started, and as we speak, all our brands which are in the premium segments in the IMFL space have started growing in the month of July. So this is a temporary phenomena. I think we should be back to our 50-51% in the short term.
That's great, thank you. And then a second question, if I may, please, in terms of market share, and I think you made a comment about expecting to grow faster than the industry over the next couple of years. Can you talk about how those market share gains will materialize, please? Is that because premium grows faster than the industry? Is it taking share from smaller players? Is it white spirits growing faster than brown spirits? Or the kind of the key factors behind your market share gain outlook, please?
So Radico's market share is primarily going to come from the increasing presence and strengthening of the whiskey portfolio. Right now, if you look at it, we have 8% of the total market share of the alcohol industry. Now, let me explain this a little more. In the vodka, we have market dominance with a 60% plus market share. In the super premium brandy category, we have a 60% plus market. In the rums category, we have almost a 30% plus market share. Now, what is left is the whiskey space, where we have a 6% market share of the industry. As Abhishek explained to you, the 8 PM brand, which is there in the portfolio, hit the 10 million cases mark last year. 8 PM Premium Black hit 1.2 million cases last year, and we are going to expand further. So that will strengthen the presence in the whiskey space. But that's not enough. You see, if you look at the way the Indian IMFL market is made, roughly 10% of the industry is in the extreme premium end, where the contributions run at the rate of more than $20 a case. That's the segment where we as Radico are planning to peg in our new brands, and that is going to help us not only in terms of volume but multiply our profit levels. So that's where we are focusing. And obviously, when we become stronger in the whiskey space in the next 3 years, our overall market share will improve significantly.
Great, thank you. And perhaps last question from me, please. In terms of the export markets and considering local bottling partnerships, Could you talk about export contribution to revenues today, what the key countries are, and the emphasis on local bottling? Is that something that you'd like to investigate more in the next year or so? And then would that be a capital intensive or capital light investment, please?
Well, so I'll just give you a background that export has been, for last 1.5 years, has been doing very well. We have, so now we are around 7% of our net revenue coming from exports, which in the contribution and EBITDA side is better. And we are exporting to 85 countries, and brand portfolio over the year has matured. I think Sanjeev will speak about the bottling, local bottling, or some possibilities and arrangement which can be looked at in future, looking at the growth in these markets.
See, in terms of local bottling operation, obviously the luxury portfolio remains in our mother distillery, so we're not even talking about that. It will be primarily into the more mass market products on that, and that we are working, exploring with our partners in each of these markets, because in some of these markets our brands are the market leaders, and the local import duty and taxations are pretty high. So we are exploring all those possibilities where it will be of significant interest and beneficial to the company to go in for local bottling operations. As I said, we've already started in a pilot way in Malaysia, but we are looking at number of other markets, whether it is the African market or the South American markets as well. So all these are on the drawing board. We are in constant touch with our local partners over there as well. Wherever we feel there is more value addition, we will definitely look at local bottling operations.
Thanks. Perhaps last question, if I could, please. You mentioned you can be market leaders in some of these markets already. Can you talk about what kind of market position you already have in Malaysia, please, and market share?
Malaysia is very big for us in terms of our super premium brand, Morpheus, and we are the largest selling super premium brand over there of the Indian products over there, and that's the reason we decided to go ahead with the local bottling operation over there. In a couple of other markets, our whisky, whether it is 8 PM or our vodka, Magic Moment, they are the market leaders. So each market is very different, each brand is different depending upon the market, and our focus is primarily at the mainstream consumers. So we want to address and provide them with the products that they like and they are looking forward, aspirational.
Great. Thank you very much.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Hello. Hello. Am I audible?
Yes, you're audible. Go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a great set of numbers. Just two questions, sir. One is you mentioned on the canteen store, the BIOs are finding difficult. Just to understand, what is the size of the market where Rampur and Jaisalmer would be competing? Just to get a perspective of, and who would be the other key brands which would be competing on the Indian side, or just if you can just share some thoughts there.
See, the absolute super premium segment in the CSD canteens belongs to brand equivalents of 100 Pipers and Teachers, and then brands like Vendor's Pride. Now, these brands are constrained today, and we are looking at these premium brands like Rampur and Jaisalmer operating in this segment, which is almost. I'm sorry, I left out the name of Johnny Walker. So we are looking at brands in this space, which is less than today 500,000 case. But the fact is, it's a huge market, and it will take away market from the premium end of IMFL as well as the top end of the foreign brands.
Okay. Second question was, sir, as I think in the starting of the call, we had a discussion that there is a strong cash generation which the company will see. And you mentioned that we would be probably looking at capexes, and also we mentioned we are launching a premium whiskey brand. Just to pick your brain on this, we've also seen a lot of PE deals which are happening in the premium brands, the local companies tying up with PE. Would you say, would you be open for any inorganic acquisition of these premium brands which can be scaled up because of our strong distribution, or would you say we would only focus on organic growth? How do you see between these two aspects?
See, first of all, what we feel in Radico is like when we have done a landscape study, we don't find much of any premium brand up for acquisition. And Radico's core strength has been creating brands. So we focus on organically growing. We've been working last 3 years on certain very luxury and very super premium brands, which we are all set to launch in the current year. So we will go organic.
Okay, fine. Thanks a lot, sir.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Anish Shavalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Good afternoon, and thank you for the opportunity. Hope my voice is audible to you. So just wanted to understand in terms of our gaining market share. So how much, if you could comment a bit on the changes in the competitive intensity which is helping us to gain the market share. And is there incrementally expected to be any changes over there which could also become a challenge for us, especially on the white side, white spirit side, because one of our competitors has mentioned about gaining more stronger foothold on the white spirit side. Thank you.
See, first of all, if you see last 4 years, we've been outperforming the market, and considerably we've been outperforming the market. As I said, we are not focused on volumes, but we are focused on premiumization. So we'll continue to drive our premiumization drive. And as far as competition goes on focusing on white spirits, it only will enlarge the campus. So we've been always there for competition. We have delivered with competition. So I think the best product will always pay up.
Okay, and secondly, just wanted to take the conversation from the last call in terms of Delhi market. So there we are seeing like excise policy changes as well as the route to market. So just wanted to understand how has been the progress over there and your comments around that. Thank you.
See, right now the bids have been offered and everything. So I think September, October, once it starts, it should enlarge the market. See, the Delhi market is there now to open up, and new players are going to come in, which obviously means that organized companies will have a fairer and better play. So companies like Radico definitely stand to gain from this market policy.
Okay, but so you're saying that this results will be showing from, say, in the H2 onwards.
See, Delhi is a minuscule market. Like, it's not that which can be a mover or shaker, but yes, definitely it will help Radico.
Mm-hmm. And if I may just ask one question in terms of the volumes, I mean, if the outlook for FY22, how are we looking at, I mean, let's say in the remaining 9 months, what kind of outlook? Because like we did quite well in the last 9 months of FY21. So are we looking at, say, our double-digit growth on volumes in this year itself also?
See, God willing, if everything remains what it is and it does not happen anything bad, then what we expect in Radico that for the current fiscal we should have a strong double-digit growth.
Okay, sir. Thank you so very much for the opportunity to speak to you.
Thank you. The next question is from the line of Sonal Goyal from Bohead Investment Advisors. Please go ahead.
Hi. Thank you for this opportunity. Firstly, many congratulations for, on the appointment of new auditor. I think it's a great step, I had, one key question. Can you please highlight, how do you see prospects of Uttar Pradesh from a next, 2 to 5 year perspective? I mean, there were some policy changes recently, and How do you think they would help you to grow? And are they, is my understanding correct that there are a large number of pubs which are going to open in Uttar Pradesh and in several small towns and cities, and UP market was starved of these kind of pubs, and that should lead to increase in socializing and drinking culture. The state has the money but not the options to spend the money. So I just wanted to know whether my understanding is correct or not.
Okay, as far as Uttar Pradesh is concerned, first of all, with a population of more than 250 million people, I think the per capita consumption is still unexploited. It is still in the process of growing, first. Secondly, Uttar Pradesh has come out in the last 3 years with the most progressive policy of the country in the excise, which is now being emulated by other states. Third, the most important thing is that in the last 1 and 2 years, Uttar Pradesh has been actively working on introducing model shops, premium shops, which is coming up by the year and month after month. So they are opening up the market completely, making sure that all organized brands are adequately available and distributed to the consumer of Uttar Pradesh. In the vision statement of the Uttar Pradesh Excise Department, they have a target of taking their revenue from 32,000 crores to 50,000 crores, which means they are just at the 50% level. And therefore, that is the potential. The growth, the possibilities that exist in the increase of per capita consumption and the growth of the market coupled with new brands selling there, I think this is a huge opportunity for companies like Radico to encash, where we have more than 30% market share. We are the largest selling company in Uttar Pradesh, and we hope to maintain our market supremacy.
So thank you. This is helpful. Another question and one follow-up on this one as far as Uttar Pradesh is concerned. You said you have the largest market share in Uttar Pradesh. So, which is the second largest and what is that market share? Secondly, as far as the other states are concerned, outside Delhi, are there any other states also which you are seeing or, you're expecting to follow the Uttar Pradesh model? And any views on Bihar, any likely change in policy or at least, discussions which have started happening around that? Thank you.
So, see, Delhi is taken to following the Uttar Pradesh model in a restricted way, but they plan to emulate this policy. Similarly, Punjab and Haryana are states which are also considering transferring their model to the UP model. Having said this, first of all, we would like to say that Radico as a company is widespread. You see, every liquor company has one key state. So does Radico. Radico has UP. But the fact is that Radico's brand portfolio being at the premium end of the market, we are widespread. Across the country, our market shares are strong in most states, like Karnataka, for example, in Maharashtra, in the Northeast, in Delhi. So we are basically well spread, Uttarakhand. So we are well spread as a company. And when we say that in the relevant segment of Magic, we hold a 90% market share, and across all vodkas, when we hold 60% market share, that is a clear indication of the fact that it has to come from various states that operate in the liquor market of India. Similarly, if you look at brandy, South India is a brandy market. There we have a 60% plus market share. So this is basically stemming from the fact that wherever there is a market for a specific category, we are strong there, and that is why we are all spread out. So UP could be a strong factor, but we are going from strength to strength in other states as well.
Percent increase, is it over next 2 years, 3 years, or what is that period you're referring to? And secondly, what would be the market share of the second biggest player in UP? Thank you.
We are very strong in Telangana. We are strong in Karnataka. We are strong in Andhra Pradesh. we are strong in Maharashtra, and we are strong in Uttarakhand.
Sir, actually my question was, what is the market share of the second biggest player in UP? I wasn't referring to where you are strong. I was asking you, who is the number 2 player in UP? What is
So that's Pernod Ricard, which has a 23 to 25% market share.
And so this vision statement of 50% increase in UP revenues is over what period?
Can you repeat it?
Sir, you had mentioned that in UP the government plans to increase its revenues by 50% as per the vision statement, and policy.
This is for the next 3 years. We plan to take the revenue from 32 to 50,000 crores.
Thank you.
Thank you. The next question is from the line of Shashank from Tata AIA Life Insurance. Please go ahead.
Yeah, thanks for the opportunity. So just 2 questions from my side. So this other Indian single malts, Amrut and Paul John, are they also listed in defense currently?
Sorry, can you say that again, please?
Yeah, so this other Indian single malts, Amrut and Paul John, are they also listed in defense currently?
I believe Amrut is already listed over there, and I'm sure this is an opportunity for the Indian single malt category as a whole to make a contribution part of the Atmanirbhar and Make in India. So we are very excited about opening up of this category for the Indian single malts.
Okay, and what would be the pricing of Rampur there in defense?
Right now the pricing has not been finalized. In fact, it's only a couple of days. So once we get the PRC done, we can inform you accordingly. But it will be highly priced.
Sure. And just to clarify, so this local bottling plants in international markets, would it be your own plants or through contract bottlers?
Well, it will all depend upon the market that we aim to enter in. So obviously we will have local partners as well, because in foreign land it is equally important to have a strong local partner. And we will look at all the possibilities of whether having our own or in partnership or a JV with the local partners over there. So a lot of thought will have to go in, and then we finalize the way forward.
Thanks. That's it from my side.
Thank you. The next question is from the line of Shantanu Mantri from Think Investments. Please go ahead.
Yeah, hello sir. So just wanted to know, after UP, like in UP we have 30% market share. Can you just let me know that, which are the next 4 or 5 states, like you mentioned, Andhra, Telangana, Maharashtra, after UP, and what would be our market share in these 4-5 states, which are big for us? Thank you.
So as we said that we are very, very widely spread. UP we have a... However, there are out of top 10 states, we are available everywhere, and in fact our market share are quite good in Karnataka, Telangana, Maharashtra, Uttarakhand, the other states like Kerala also we are, after the price increase, ramping up the market share. So I think we are widely spread, and as we mentioned earlier also that 37-38% of our saliency come from north, 37% come from south, and then east and west, and 11% from CST. So its company is very geographically very, very widespread in its saliency.
Like, so actually where I was coming from is, say this UP has this strong target of, increasing revenues to 50,000, and, we having 30% share, definitely it will be a big benefit for us. So what I was trying to map was that, other than UP, are there some few states that you all have, envisioned where, similar gains, big gains could come?
Yes, so our next phase will come from the, first of all, I would like to say that there are 5 states which contribute to 65% of the industry. They are UP, Karnataka, Telangana, Andhra, Tamil Nadu. Leave aside Tamil Nadu because that's a restricted market. So we are looking actively at strengthening our market shares in the states of Karnataka, Telangana and Andhra. They will be our next phase of growth. While we are already strong there currently.
All right. That helps. Thank you.
Thank you very much, ladies and gentlemen. Due to time constraint, that will be the last question for today. I will now hand the conference over to the management for closing comments.
Thank you, Asit. Thanks everybody for joining on this call today. As you are aware that Radico has a robust brand portfolio and we have continued to invest behind our brands. We are looking to expand our premium offering and further new brands launches in coming quarters. The company has a strong balance sheet and cash generation which provide us ability to invest behind our strategic growth plans. Overall, we believe that there may be some short-term challenges in the industry due to the pandemic, which shall not last too long. As vaccination increase and things are starting to normalize, industry will return to the growth path, and we have seen in Q4 of 21, and Radico will outperform the industry. We look forward to interact with you on next earning call and further engagements. In the meantime, if you have any queries, do let us know and feel free to mail to us. Thank you.
Thank you very much. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.